Good morning, Trinidad and Tobago, and welcome to the Bourse Report. Today, we take a closer look, now that results are in, at the 6-month performance on aggregate of the entire stock market. We take a look at both price performance and whether or not investors have been reacting or not reacting to changes in corporate performance reported by all of the companies on the Trinidad and Tobago Stock Exchange. So first, let's take a look at some of the local market performance on a year-to-date basis. And with the 6-month results for all companies now in, we see that the market has been on somewhat of a flat note on a year-to-date basis, up just around 1.6%, and that's the Trinidad and Tobago Composite Index, the blue line. And there has been quite some divergence in performance between the local and cross-listed stocks. And the local stocks, as measured by the All TNT Index, has been down about 2.3% year-to-date, and that's this orange line here, while the cross-listed stock has been pretty much on a very strong rally, particularly in the last month, up around 17.5%. And of course, the cross-listed stocks include most of the Jamaican and Barbados-based stock listed locally. In terms of major movers, not much of a surprise here, as well as the two most significant gainers for the year have been cross-listed stock, NCB Financial Group, or NCBFG, up 64% year-to-date, while GMMB Group Limited has been up some 36.7% as well. Guardian Holdings is up around 30.4%, and Agostini is up just around 14.3%. On the other end of the spectrum, some of the worst performing stocks year-to-date have been, unsurprisingly, all of our all Trinidad and Tobago stock or locally domiciled stocks, including OCM, which is down 25%, year-to-date NFM, which is down 16%, and Unilever, which is down 14.8%. So that's an idea or a flavor of how the market has been going. But what have these market movements been reflecting broadly the trends in actual revenue and earnings performance by each of the indices and sub-indices? Let's take a look. And in terms of revenues, we can see that the Trinidad and Tobago Composite Index, highlighted in blue, has been up about 3.8% for the comparable 6-month period in 2017 versus 2016, whereas profits before taxes have been up around 7.2% for the composite. The All TNT Index, meanwhile, again, locally domiciled companies, in terms of their revenue growth, has been up about 3.3%, whereas profit before taxes have been up 4.3% and profit after tax around 2.5%. And the cross-listeds have been almost a 5% increase period over period in revenues, while the profit before taxes have been up around 13.5%. Now, how has this translated into earnings per share growth? Let's take a look. And for the composite index, we can see that earnings per share, and the composite again, locally and cross-listed stocks, earnings per share has been up around 4.8% to the left of your screen, and dividend growth has actually been, for the comparable periods, up around 5.5%, whereas the index has been, as we mentioned, up around 1.6%. For the All Trinidad and Tobago Index, earnings have fared relatively well, swimming against an unfavorable economic tide of challenges, including foreign exchange shortages, lower consumer demand, etc. And earnings have hovered just around a 0.3% decline, whereas dividends have actually increased around 1.7%. And the index overall, in terms of price movements, is down 2.3%. And the cross-listed stock has been going along very well, with earnings per share growth of 15.7%, dividend growth of around 15%, and a price advance of around 17.5%. So, who are the biggest hitters or the main movers of the index? Well, as we can see for the composite index, just around 49% of the index is comprised by value of the banking sector. So they would have the most significant movement impact in the price, the movement of the overall stock market. Conglomerates follow up next with around 16% of the weighting, while non-banking finance is around 16% as well. And manufacturing one is just around 14%. Taking a look at the sector movement itself, we see that there is now some divergence between corporate earnings and price movement. And here we can see the best performing sector for the year to date has been the energy. And 6 month over 6 month, 2017 over 16, energy earnings was up 26%, and the stock price in green was up around 10%. Non-banking finance also had earnings growth over the period for 25%, while stock prices in the sector on average advanced around 13%. And we can see that banking was resilient with an 11% growth overall in terms of earnings and just about 3% in terms of pricing. So some relatively stable price, a stabilizing factor here overall for the sector. On the other side, manufacturing too, which comprises mainly TCL earnings for the comparable period was down around 86%, and price movements, however, have not reflected that sharp decline, just down about 4%. In property, which is Flip Deco, 57% decline in earnings, while there's been actually some measured advance in prices of around 5%. And the conglomerates, that is the Answer McCalls, the Massey's, and the Grace Kennedys of the stock exchange, have been down around 15% in earnings, with just around a 1% decline in prices. So at the sector level and probably at the individual stock level, there have been divergences between performance as opposed to actual stock price movements. What does that mean for investors? Well, in reflecting on your portfolio and thinking about what to do next, you may want to ask yourselves a few questions. One, am I invested in stocks that have relatively attractive valuations? That is lower price to earnings multiples, market to book ratios, etc. If the answer is no, then you probably should consider making some reallocation. Am I invested in stocks that are paying me to hold them throughout periods of cyclicality in terms of performance through higher dividend yields? Again, that's a question you need to reflect on. Do the stocks I hold have low dividend payout ratios, meaning that if their earnings falls for a short period of time, they can still afford to continue paying me for holding them through higher dividends? And finally, of course, do the stocks I have very significant exposure to the Trinidad and Tobago economy or not? And do they earn US dollar revenues, which could, to some degree, offer a hedge against any TT dollar depreciation that we may or may not see in the coming months or so, depending on how the economic fortunes of Trinidad and Tobago unfolds. That's it for this week's edition. Lots to think about. Of course, you can always give us a call at 226-8773 or 2BORSE. Email us at invest@boursefinancial.com or visit our website at bourseinvestment.com. Have yourselves a wonderful and productive investing week. This has been the Bourse Report.